far as Wall Street's concerned, the trade détente with China is good news, as long as it sticks. But the trade war was never this market's only problem. Remember, last month we got a tepid employment report. So what should we expect when the Labor Department releases its next set of non-farm payroll numbers this Friday? Look, if you want to get a read on the job market, you need to check in with payroll processors. I'm talking about companies like Paychex. That's the second largest payroll processor in America, one that focuses on small and medium-sized businesses. When Paychex reported last week, the earnings were a little light, according to some analysts, and investors might not have been that thrilled with management's outlook. The stock got hammered on the news, but since then, it's been bouncing back. What's it mean? Let's take a closer look with Martin Mucci. He's the president and CEO of Paychex. Get a better sense of how his company's doing and also how the job market's doing. Mr. Mucci, welcome back to Mad Money.
Thanks, Jim. It's good to be here.
All right, Marty, I had the good fortune of being away when you reported because I got to see how the stock's bouncing back, not how some people sold it down. I just want to go over a little housekeeping. It seemed like that your numbers were a little misunderstood. Not because you were opaque, but because the analysts didn't seem to understand. You were trying to explain what your numbers really look like with or without this insurance component. Just basically tell people, I think, that business was pretty darn good, wasn't it?
Yeah, I think it was. We had a solid year. 12% revenue growth got us up to $3.8 billion in revenue, and solid operating margin and adjusted diluted earnings per share of 11%. I mean, we felt very strong. We did exactly what the expectations were for most that were out there. So I think we had a very solid fiscal year, good solid fourth quarter that's starting us right off good this year.
It also seems that if you keep your word about what you said, and you've always been a man of the word on this show, you're talking about 11 to 14% in the second half as you anniversary this acquisition, which would actually be an acceleration from what you've been doing.
Yeah, this particularly when we got out of we will accelerate, and we feel really strongly about the revenue growth, particularly on the HR side. You know, that's what's been growing the fastest, double-digit growth, even without Oasis, the acquisition that we completed. We will have double-digit growth. We did have double-digit growth, and we think we'll continue to have that in our client employees that we add. We're at about 1.5 million worksite employees that we now serve. And that's been great growth, and that's more than anyone else serves across our HR services.
I also thought, unfortunately, you flagged the retirement crisis. No one talks about it. A quarter of Americans have no retirement savings. Sounds like what you're offering could increase the number of people who put money away.
Well, we think so. And one of the things that's been a great help is the mobility app that we offer through Paychex Flex. That app now allows the client's employees to sign up for the retirement with basically 4 clicks on their mobile app. So it doesn't have to be all the paperwork that it used to be. And we're already seeing participation rates move up for those participating in the plans that the client has. That helps them be compliant. That helps retain that plan as well.
Now, Marty, I wasn't sure. You did talk about how tight employment has, you think, kept small, medium-sized business creation, particularly small business, a little bit more subdued than you would expected. But you dismissed a bit that it might be because of minimum wage. I was thinking that perhaps, because you said that the longer hours, that people are reluctant to hire new people because or start a new business because of the minimum wage. Which is it really, the minimum wage, or is it the difficulty to find employees? Because my old friend Larry Kudlow would say, Jim, the minimum wage is discouraging new business, and that's what Paychex is looking at.
Well, I think it is a little bit of both, Jim. I think those existing clients, small businesses, are having a difficult time with those minimum wage increases that are going into effect, and they're trying to get more hours out of the current employees and productivity, but that's difficult. But I think the overall issue for small business job growth is definitely that there's a shortage of employees, and that small businesses have a more difficult time hiring because they don't quite have the flexibility and the recruiting power and the flexibility of work hours that new hires really want these days.
So do you think that that's going to mean that there will be year over year a slowing in employment? Because in many ways, it's really kind of a high quality problem when you think about it.
It is, you know, when you've got so much work, but you can't find the workers. I definitely think it will slow down a little bit on the growth. We're still going to have growth in small business hiring, but it is definitely slowing down a bit because it is difficult for small businesses to find and attract and hire the right people.
Meanwhile, there were analysts again who were focused on the idea that the Fed might cut, and therefore that would be bad for you. Today was a day that people felt, well, hold it, maybe the Fed won't cut, and your numbers go up. I look at the actual delta. It's not as great as this PEO business that's growing like mad.
Yeah, no, I mean, look, that's a small piece. We went with low rates for a long time. It certainly has been some wind in our back to have rates go up on the float, as you know. $4 billion in float that we earn interest on. But it's the growth in the fundamental business, the HR component of the business, the PEO business, that is showing double-digit growth last year and this year as we go into the new fiscal year here this month. So we're feeling very strong. The need for HR support at the small and mid-sized business level has never been greater with the complexities of regulation.
Well, then once again, I just want to reiterate, you did not keep your outlook the same. You increased your outlook for the second half, and those who felt that you were tepid in your view of the future, I think they missed the mark.
I do too. I think they misread it. I think we came out very strong with the growth in the revenue we expect this fiscal year, and we feel very strongly about the HR growth in the business as well. And we delivered on the results that we expected in the previous fiscal year that we just closed. So, and we increased the dividend 11% just back in May, and we have one of the highest dividend yields in the business. So I feel like the fundamental results are there financially, and the looking for exceptional returns for our shareholders as well.
Well, I could not agree more. I'm glad I was able to get you today so we could recommend it with the idea that you very rarely get a discount in Paychex. This is the time. Thank you so much, Martin Mucci.
Okay. Thanks, Jim.
Martin Mucci is the president and CEO of Paychex. We've been recommending this stock literally for 55 points. And I reiterate that it's a great buy. Mad Money's back in.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.